Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to take you through the Forex market wrap, go through the news this week and some charts of interest. So going on to the news then, we had some interesting data regards to the past couple of days, especially with US data, but there's also been some changes elsewhere which we'll come on into a little bit. But we kicked the week off with some GDP out of the UK, which saw a move to minus 0.3% from 0.1%, so very negative GDP in the UK. We then turned around to US data. We had some really positive PPI data, seeing a move from minus 0.2% to 0.4%. However, in the FOMC meeting minutes, we were left a little bit disappointed because the Federal Reserve didn't really outline how aggressive they were going to hike in the next meeting. And there was some talk that although other Fed members are saying that the Fed need to be hiking rates aggressively, that there could be some talk of maybe hiking rates for longer instead. CPI month on month saw inflation rise. You can see here CPI to 8.2%, core CPI up stayed the same level at 0.6%, and then to follow that up, there was retail sales data coming in above expectations, especially core retail sales. Did see a drop in normal retail sales, but the core retail sales moved higher. Now, the other news that we've had out most recently, the UK Prime Minister Liz Truss has sacked the new UK Chancellor Kwasi Kwarteng. I do believe, as I'm doing this video, they have announced a new Chancellor, which was Jeremy Hunt. So Liz Truss there having to take action over the recent controversy with the recent budgets. I've also put here the Fed may have to act more aggressively as inflation data shows little slowdown, which I've just explained there. Moving on to some charts that we looked at this week then. So we kicked it off with euro dollar, and we're talking about this key area of 0.9850 acting as resistance. However, we didn't quite see that this week. Price, although we did start to trade lower, ended up just moving sideways for the entire week. We've been capped between, let's say, the 0.9800 highs and the 0.9660s. So we haven't really done anything on euro dollar price, really just mixed here with regards to trading up and down with no real kind of direction at the moment. I was expecting price to push towards the 0.9550 lows due to the expected high inflation data. But the market may have already priced that in by the looks of things. So it'd be interesting to see if we break out of this range where price could head towards. Going on to Aussie US dollar then, so we expected some downside towards this 0.6250 due to the recent RBA announcements, and that's what pretty much happened at the start of the week. Again though, like many other major Forex pairs at the moment, price has been a little bit range bound here despite some recent weakness coming into the market today. We had a rebound yesterday, a lot of risk on in the market with stocks rebounding as well, and that kind of helped Aussie dollar push back to the highs here, but we've seen the Aussie weakness remain today, and if it was to remain, maybe we will see the lows here at 0.6150. Going on to euro yen, so euro yen did the opposite of what we expected. We were expecting price to maybe find some resistance at 142.50 due to the recent risk off environment in the markets, and that wasn't the case in the end. Instead, price traded through this level. We had a strong break of this level. The yen weakened significantly and is continuing to do so. So we could actually see euro yen back to 145.50, which are these highs that formed through here. Finally then, gold. We expected some downside on gold. Gold did move lower, however, again, for a large majority of the week we have been sideways. We did initially break out on the CPI data, seeing price come back into the 1644 level of resistance. We've then since bounced from there, and then we were looking at we're expecting some kind of resistance at 1670, and that's exactly what we got. We've got some resistance and price push lower. I think if we can trade through these lows, the next stop should be 1620 for gold. You know, recent history has shown us that when the Fed need to hike rates aggressively, gold prices fall. So expecting that to continue, so gold prices should continue to move lower as well. Hope you enjoyed the content this week. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content. And I'll speak to you in the next video.